Credit card delinquencies are 12-year high right now. Credit card rates are well over 20%, the record high. Moreover, the credit card debt is over 1 trillion and a personal saving rate has never been that low. With less than 4%, it's the lowest it has been since the great financial crisis of 2008. What does it mean for the market? When to expect a recession? What to do with your portfolio? Today is a very important video, so stay tuned and let's go. Good morning, everyone. Boys and girls, my name is Russ and today is Wednesday and a very important macro update. I would not focus on macro for the next 2-3 weeks, so that's the one that I really want you to watch. Why? Because if you remember, when I was sitting in Greece in May, I was making the video, let me highlight it on top, and that was called when to expect the market crash. And today I would like to come back to that because everything so far is going quite according to the plan, and I found a very interesting fractal that is associated with 2007 rate cut and the huge drop in the market that has happened a few weeks later. So today we're gonna speak about macro. We're gonna go into the charts and see how our trades are doing. We're doing amazing on silver. I know silver, by the time you're going to watch this video, is probably going to be reclaiming $30. We caught it very well with gold to silver ratio topping. We're going to speak about our lithium picks. They're doing really well. And I'm going to give you a couple of altcoins that have finally, totally has changed the hands and are breaking out of multi-year accumulation range. So today's an important one. I'll try to make it concise and short. And let's go. First of all, you remember, we spoke with you about the yield curves and what does it mean when the yield curves do uninvert. Every time when we are looking at the 10-year to 2-year maturity, we are often forgetting about 10-year to 3 months. And here I'm coming back to our classical 10-year treasury constant maturity minus 2-year. And here you see it every time we start this uninversion, recession hits. The recession is highlighted by St. Louis Fed in these gray areas on the chart. So we never know when it's gonna come, but we know that it is normally when the yields already uninvert and keep forward spiking. However, I want to point out that maybe next few weeks are still good because I see that 10-year to 3 months, which is another indicator for the recession to hit, are currently going down. There is nothing that indicates an inversion on that chart. And that gives me another hint that we first gonna take out the poor highs that we created before we had the Black Monday with the 60 weeks. And one last chart that I was illustrating on my previous video of May, when we are having the high yield or so-called junk bonds interest spike, that normally also indicates that the recession is here. We do not yet have those very attractive for investors just yet. So coming back to chart, I think we're still gonna see some strength. And here you've been remembering, if you've been watching my streams in the past, that I indicated that scenario where we're gonna take the liquidity from those highs, from those shorts. It was too easy to go here on this so-called overbought moment. And this is the reason why I think if we're gonna really have those so-called recession drop, that this is gonna happen all the way from us taking out the liquidity from those highs first. And this is something that really reminds me of 2007 when we started our first rate cuts. You remember, for those who are watching my streams, that I've been already indicating this period in history. I was indicating that's the reason why we have those rectangle in here, that straight after we had the first cut, market has been really exuberant, taking those highs and then going down significantly in a matter of 20% within the coming few weeks. And what happens afterwards? And then we had those hated rally. We actually reclaimed those highs, probably making Jim Cramer or someone on CNBC tell us, that the worst moments is behind, creating those actually higher high or change of character in our downtrend. And then we really had one more severe drop further on from there, another drop of roughly 50% or 45%, depending on the time frame you're looking at. But yeah, this is something that is possible to happen. I'm not saying that the 50% drops are very probable right now, taking into account that we live really in the world of modern monetary theory, that government can create as much money out of thin air as it wants, as soon as allegedly it is not creating the issue of unemployment and inflation. And yesterday, we just received the news that the Fed have been overestimating the number of jobs by nearly 1 million jobs extra. This is the worst mistake in more than 15 years. And if we cannot trust anymore the job data, we probably couldn't trust inflation data. It's very clearly that Fed admitted they have changed the methodology for recession calculation multiple times. So obviously the numbers that we see right now are far from the numbers we've seen 3 years ago in terms of how they're calculated. But even with this change methodology, something is still telling me that we're not gonna come back to 2% inflation without a severe recession, and that is normal. We only have normal inflation normalizing after few months or even quarters in the recession environment. I am wondering how we could expect that happen otherwise. But don't worry, as soon as recession hits in, the only way to save the market would be additional liquidity pumps. And what's gonna benefit the most from that environment? Of course, our commodity positions, primarily silver and uranium. So, looking at the chart right now, I want to point out additionally, please exercise caution when we are opening above our previous highs. We are above 564 on S&P 500. I would start taking all the profits that you have left here from the indices, potentially relocating them into commodities, and moreover opening the hedge positions. We're gonna all do this in a Telegram group. I actually highly recommend, if you're not yet a subscriber, I'm doing everything for free. That's as the part of my purpose and bringing back to the community. It's only available for Nick's newsletter subscribers, which is less than $30 a month. I think that's like the lowest price on the market. And yeah, I am providing all of those updates for free. Let's see what we've been doing in the Telegram group in the last few weeks. Of course, I focus mostly on observing my highest conviction, which silver, alongside with Bitcoin. We've been scalping Bitcoin in the last few weeks. Based on the feedback received, improved the alerts so people actually can see the levels and the reasoning for those entries. But what's really important, that most of the trades that I do, they are coming on a particular event, and that's why it's very hard to update it on YouTube, because normally I am only here once or twice a week. So one of those trades that really did well, for example, are lithium miners, bought back Albemarle and Piedmont Lithium. And let's see the date when that happened, August 13. If we are now coming into the charts, you can see that from August 13, which is this green candle in here, we are now pre-market roughly 12% on Piedmont, which is just in 4 days time, not bad at all. And Albemarle, we were at 76, 77. Right now at pre-market, we are at 86, 85.2, which is another 11% in a matter of 5 days. Not bad either, because what is this? 11%, this is an average hedge fund return, or portfolio manager return over the year. So it's not so bad to do it in the blue chip, one of the S&P 500 stocks. But of course, those are very safe bets. I do not expect their 40% moves. For those, of course, watching me for a few months more, you know my high conviction in PayPal. This is quite good. I would say you can just measure it yourself. What's so interesting here, that of course, we just made 30% on that stock. But what's so important, if I go here on the weekly and I slightly reduce the number of indicators on the chart, we also can see that this is pretty much the beginning of this move. This is us breaking out from that consolidation range where we have been for as long as 70 weeks, so more than a year. It took us to actually close the weekly. I mean, the weekly is not yet closed, but I would expect, obviously, we're going to close above the 68 range that I've been indicating. And then, as I've been saying, the next price targets are $76 and $96, and that's also a very conservative scenario. I've been indicating that Paul Tudor Jones and Jim Simmons been adding. I've been also indicating that one of those days PayPal would just create a 10% day at some point and leave everyone behind, and that has been happening over the last 4 weeks. We had an amazing uptrend, and this is just 25% in less than a month. As you can see here on the chart, that looks quite good. 3 white soldiers. Enough about PayPal. Let's go into other asset classes. As I've been saying last week, over the next 3 weeks, or at least until the Labor Day, which is the beginning of September, I expect market to just stay where it is, considering that it thinks the job numbers are good and inflation is being combated. Of course, there can be different form of reaction on this news that we just received from Fed that they have overestimated the real number of jobs. I think market digested that quite well. For a certain reason, maybe because market already starts to sense the extra liquidity coming in this or other form. And what I'm saying is, whatever we're going to experience, this dreadful crush in the tech market in September or October, I would say metals would, of course, also suffer on an initial spike, especially if that spike will be driven by the geopolitical news. I see as a lot of escalation as of today happening around Middle East, so that might be the beginning of that correction. But metals would recover a lot. I would say if gold has the room to run from here to 2,800. As you can see how confidently we are closing above this 2,480 range that I've been indicating on Telegram. I would say that we still have a lot of room to go to 2,800, and then I would expect a low somewhere towards 2,200, 2,100. So that gives us some time to enjoy the ride. And what I'm saying about enjoying the ride is obviously bringing me also to gold to silver ratio. Guys, I've been giving you the exact top. I've been giving you the exact top of this move. I don't know if there is anyone have been doing those on YouTube. I think we really nailed it amazingly. And I think we're never going to come to those levels the way it's down right now. And why I am showing it to you? Well, because silver is gonna benefit much more than gold. I think as soon as we are able to reclaim 30 or 31, of course, we're gonna have a correction, a pullback that might also look like this diagonal resistance line. But what I'm trying to accumulate here on top of silver and gold is obviously other metals. And if you remember my conviction, I've been saying that Palladium provides us amazing opportunity, which is basically the swipe of this range. We haven't been here. I'm going on a monthly, guys. We haven't been here on those Palladium prices since, well, even COVID crash was not bringing us there. Look at other assets where we are comparing now to COVID crash. We've been only on these levels in the 2018. 2018 we were at the levels. So on Palladium itself, we are roughly 75% down from 2 years ago. So it gives me an amazing mean reversion opportunity. And I'm coming back from monthly into daily. I see that this range is holding. We had this liquidity swipe here. We reclaimed the range. Now I would anticipate the range high to be tested. And I'm not sure if it's going to be from the first attempt or from the second attempt. But I would expect that we're gonna do something like that, maybe bounce back and maybe reclaim this range. So I'm looking very much forward to be positioned in the companies that are producing Palladium. And one of them, of course, for those who are watching the stream, they know it's SBSW, Sibani Stillwater Limited. I've been accumulating, it's one of my largest positions because the company is not as small as the junior silver miner. I am here on a weekly chart. Also, it's holding the button quite well. Obviously, if you are more of a trader that wants more safety, you would probably like to long only when that level of 470 is reclaimed. But looking at how that starts to front run Palladium, and also how silver junior miners are starting to front run silver, that gives me a hint that the miners are starting soon to feel much more confident than the underlying asset classes, and that's going to happen more across the board. I see that amazing week that we had. Super important to mention to you when you are looking at RSIs and you are finally starting to move from ranging environment to trending environment, you need to stop looking at overbought and oversold. In RSI, in that case, has to be read completely differently. It's not about us hitting 70, taking profits and running away. It is actually RSI is staying in the so-called overbought territory for long enough that really illustrates how market is holding well and how shorts will be eaten or liquidated. So keep it in mind, oscillators in trading market, oscillators in ranging markets are not the same thing. And please don't board this mindset, because we're gonna catapult those things. And I don't want you to be shaken out with 20% move because someone told you on Twitter that now we are overbought. Please think twice. And that's the reason why you also have to be very careful. I mean, I am not gonna tell you trust me blindly, but at least you see I have a good intention. I don't, try to take advantage of something. There's a lot of people, for example, when you see Black Monday, Fidelity, Schwab, all those platforms got closed. They got a technical problem, so the retail cannot buy the dip. And there is a lot of information on Twitter that this is the horrible beginning of the carry trade, yen unwinding. All the YouTubers start to speaking about something they never speak before. Everyone becomes an expert in a carry trade and the Japanese yen. I've seen it all over the group. And that's why you start understanding, okay, the sentiment has been shifted, and the sentiment is shifting rapidly. Also partially because there is a huge institutional buying, and institutions want to fill their bids. They do whatever they can to prevent retail to enter at a very lower moment. So Twitter influencers, platforms are closed, and so on and so forth. If that doesn't indicate that we are now going to take those poor highs on S&P 500 and come back, then what does? Well, coming back into the charts, one more super interesting thing here. I see that some altcoins, and I'm looking here on AAVE, the blue chip DeFi coin, after a very boring range since the May crash of 2022, being here for consecutive 140 weeks. So if we are looking on a daily and we see this range in green, I want to tell you one thing. It is very important that you understand how many hands have been changed along that chop. Speaking about 823 day, a very boring and long chop. And we are finally breaking out and confirming our breakout from there. So the new owners, the new hands have been acquiring those coins at a discounted price, will be able to do whatever they can and whatever they want to pump the prices up. So please be aware of that setup. It is very similar to PayPal. It is very similar to, for example, where Palladium miner is going to be, with just one difference. There, you're entering in the lower part of the range with the Titan validation, and here, you're entering on the breakout of the range with the Titan validation of us accepting back into the range and holding there for a few more days. Like we had, for example, this, I call it swing fail pattern, SFP. Let's highlight those rectangle in red, and you can see that here, of course, buyers tried to push the price. It didn't work, so we accepted back into the range, liquidated all the late longs, came back to the middle of the range, and now we have more gasoline, more steam to push the price higher. Very often it's also called Adam and Eve pattern, but without looking at the patterns right now, I just want to emphasize one thing. You are gonna see more and more coins starting to do that. So if you want to accumulate AAVE, because honestly, the potential, just looking at a weekly chart here, you can understand, just to reclaim those highs, it's gonna take us from the top of the range another 100%. This is not bad. What you can do, as I recommend, you can go onto Bybit and Teal Street. You can simply come and beat anything between 110 to 130 on the retest of that breakout. That area, you can create, for example, 20, 30 orders all at once being transmitted to Bybit. As you can see, I already bid here around 99 because I really love this V-shaped recovery and the strength with which we are accepting into this previous zone. I didn't cut back because that's normal recap of that order block, and that's fair value gap that even get front run. So yeah, here in my position here, what's also important, if you don't want to trade derivatives, despite the fact that Bybit is giving 500 USDT dollar trade for free, I leave the comment in the Section down below, all you need to do is to deposit $100. It's very fine if you feel like not touching derivatives for now. I still prefer that platform, and it's not that anyone asks me to tell that, but there is an opportunity to beat spot with the direct stop loss and take profit. So I'm always using that just because I don't want to monitor my position all the time to see if they filled or not. I would place the spot bids around 110, 120, and then I would consider having my stop loss around 90 if you're like really accepting back into the range, for example. Guys, I want to wish you an amazing continuation of the week. We're going to be back on Friday. Please also don't forget, Friday I speak on the conference. Whomever wants to join, it's actually, we decided to do it free for the newsletter subscribers. All you need to do is to subscribe for the yearly newsletter, and on Friday, 9 p.m. London time, I'll be one of the speakers, gonna share a few interesting dialogues together with organizers and other participants. With all that said, much love, and I see you on Friday.